Hi, I'm Michael Newrock, and today's lesson is going to be on setting achievable goals. So it sounds easy, it sounds obvious, it sounds logical, but a lot of people fail this first step. You know, they come into trading, or I mean, it can be anything. Let's look at the gym example and the weight loss example as something that I've experienced myself, and you go in there and it's like, I'm going to lose, 20 kilos in 1 month. It's not achievable. And you set yourself up for failure. And the same thing applies with trading or with any kind of business or with learning anything like learning how to play the guitar or music. And once you have set yourself achievable goals, it becomes a lot easier. And just on a side note, if you've seen me in the videos, you should have seen me a year ago. I've actually lost a lot of weight because I set myself achievable goals. I decided, well, that's that. And I have 3 young children, so I decided to set myself achievable goals rather than never getting, past the first base because they weren't achievable. So, you know, you find, well, what's the point? The same goes for trading. You need to set yourself achievable goals. So find out what your goals are, write them down, as I mentioned in the previous video, and stick to them. So if it's doubling your account in 12 months, what do you need to do for that to happen? But make them achievable because that is the best way for you to succeed. So setting goals will help you be on track. It's easy to go down the long and winding road. It's easy to get lost. It's easy to forget what your goals were and to go down a whole bunch of dead end streets. And you end up coming full circle 12 months later and think, what the heck happened? So you need to set these goals to keep you on track, whatever it is in life, and trading is no different. Start small and plan how you'll grow. Okay, so let's say you have a $10,000 account and you're doing all the proper money management and so forth, which we'll go over. Start small. Start by saying, okay, I want to get one winning trade this week and I want to make $100. That's 1% of your account. Let's say if you had a $10,000 account. Start small and plan how you'll grow. So as you do progress along this journey of trading, you'll set yourself bigger and bigger goals, just like, setting the bar, just like with athletes, they want to do the high jump and, they literally put it up half a centimeter or whatever it happens to be every time until they do achieve, those ultimate goals. You won't get there straight away. You need to start small and then work out how you're going to grow to that point. So make sure your goals are smart. And that means make it specific. Write down exactly what you want to achieve. Make it measurable, which is easily to do in trading. Make sure it's attainable, as I've already gone over. Make sure it's realistic and make sure it's time sensitive. So be specific. I want to make $100 this week. That in itself is measurable. Make sure that that's attainable. You're not going to achieve that necessarily if you've got just a $500 account, because that $100 would then represent 20% of your account, and that's not realistic. You need to be in proportion to what your account is, and you need to be time sensitive. I want to do that by this particular time. So base your goals on your capital, as I alluded to previously. Base your goals on your capital. If you do have a $500 account, then you can do the same thing, but make your goals proportional to your account size. So in that case, a 1% growth in your $500 account would be $5. If it was $1,000, then it would be $10. If it was $10,000, then it would be $100. If you had a $20,000 account, then it would be $200. Okay? And base your goals as a percentage of your capital. You don't want to set a goal that's just totally ridiculous, totally out of proportion to your capital, because in trading, it does give you the opportunity to generate wealth. But you can only do that if you have capital, and your capital dictates how much you can safely generate. Small monthly returns have a significant effect on capital growth. So in the previous video, I mentioned if you were going to double a $10,000 account to $20,000, you would need to make roughly 8% per month, or $800. So what would you need to do on a weekly basis? You'd need only $200, okay, or 2% for that week. You made $200 net per week after, just in round figures, 4 weeks. That is like 4.5 weeks, or whatever the exact number is in a month. But just for simplicity's sake, $200 a week, 4 weeks a month, that's $800 a month. Doesn't seem like a lot, especially on the weekly basis. You've got a $10,000 account, you're itching to go, and $200 just doesn't seem like a lot. But you do that consistently, and you're generating consistently $800 a month, which still doesn't seem like a huge amount of money. But it has a significant effect on your capital growth, because in 12 months, you've doubled your account approximately from $10,000 to around $20,000. So 12 months from now, where do you want to be? And realize that those small monthly returns, or small weekly returns, or small daily returns, if you only need 8% a month or 2% a week, what do you need per day? It's less than 0.5%. So you're starting to understand 0.5% is nothing. So let's say you do 0.5% a day, 5 days a week, that's 2.5%. Maybe you have a losing day. So, it averages out, you're doing 2% a week. And at the time, it doesn't seem like a lot. But from little things, big things grow. They do have a significant effect. Okay, it's like the butterfly effect. Tiny little flap causes a tsunami on the other side of the world. You know what I mean. Stay focused and relish and be proud of those small monthly returns, small weekly returns, small daily returns. If you're generating a return, you're doing really, really well. You're doing a lot better than the vast majority of traders. So keep that in mind. And by staying consistent, you will see significant effects on capital growth over a period of time. Once again, be realistic. You need to be realistic as per your capital, as per your ability and your experience level. So take it slow, take it easy, and, it works out a lot better. And I'm sure many of you are nodding or smiling, and with something that's not necessarily in trading, but that's happened to you in your life, and you want to get to where you want to get as quickly as possible. It's only human nature, but it doesn't often work out that way. So be realistic, and by being realistic, you're going to get there quicker. Trust me. So trading is not a get-rich-quick scheme. There are plenty of guys out there that push it as such. I'd like to think that I don't, and the team that I'm with don't. We keep it real, we keep it honest, and it's just not a get-rich-quick scheme. It has the ability to generate massive amounts of wealth. Think of it this way: if you had $10,000 account on around 0.5% a day, 2% a week, 8% a month, you double it to 20,000. Every 12 months, you increase your trading sizes, your lot sizes. So you're basically compounding. That 10,000 turns to 20,000. Second year, 20,000 turns to 40,000. Third year, 40,000 turns to 80,000. Fourth year, 80,000 turns to 160,000. Fifth year, 160,000 turns into 320,000. Sixth year, 320,000 turns to 640,000. Seventh year, it's like 1.2. Eighth year, 2.4, and so on. After 10 years, where will you be? Starting from a humble $10,000 account on a humble 0.5% a day. Okay, so it's not a get-rich-quick scheme. It's get rich as quickly as possible in a slow, manner, and you will get there if you do it that way. And that brings me to the well-known saying, "Slow and steady wins the race," and it's true. We all know the story. Majority of us, I'm sure, would know, the hare and the tortoise. The hare runs off, goes down this tangent and that tangent, doesn't have a plan, gets complacent, runs around in circles. Yet the turtle has a plan, It's steady as she goes. It knows what it's doing, and it gets there and wins the race. I mean, whether you're 20, 30, 40, 50, 60, 70, it's one of those little pearls of wisdom, little gems. And we often discard it. It's, oh, well, okay, but, I want to get there quicker. Doing things quickly doesn't necessarily get you there quicker. Slow and steady wins the race. And I'm sure you'll agree with that. Never trade more than a set percentage of your account. Okay. So per trade, let's say you stuck with 1% of your account. 1% doesn't sound like a lot, but if you lose, then you're 1% down. And that just means that to achieve your weekly net earnings of 2%, you not only have to make the 2%, but the 1% you lost. So, it has this effect. You need to keep it as a set percentage of your account and don't deviate from that, particularly if you're going to have multiple trades at any one time. We'll get into that a lot more later on. For example, it's okay to have multiple trades if you're in winning positions and you've got locked in profits on trades that you're already in, because the market works in a way where, if you're trading a certain pair against the US dollar and then you take on, let's say it's the pound, and then you come in with the euro against the pound, and then the Aussie against the pound, then the Kiwi against the pound, you've got 1% on each, you think you're doing okay, but in total you've got 4 or 5% between the 4 or 5 trades. And, if some damn report comes out or whatever it happens to be and moves the US dollar in a direction that you don't want to, all your trades are going to be affected. And that's one of those disastrous moments. You don't want to put yourself in that position. So if you're going to have more trades open, make sure that the trades that you've already got before you open new trades are in winning positions and have profits locked in. Okay. And getting back to the point, never trade more than a set percentage of your account. Don't double down. Don't triple down. Don't do anything like that. Just stick to your plan. And in this case, set a set percentage of your account. Don't force winners. Don't insist that you've got to win a trade that day. You'll have losing days. You'll have losing weeks occasionally, hopefully not too many. And we're going to go over that in more depth. But don't force winners. If it's not your day, it's not your day. Don't go revenge trading. You may have a losing trade, and then try to get back in because you're convinced that that pair is going to take off. It might not happen. And then you end up with 2 losers by trying to force that winner. Don't over leverage. Over leverage will kill an account faster than, fill in the blank. So don't over leverage because it puts you in a state that is not fully honest to what your account is. It's okay to have some leverage, of course, but don't over leverage. Not with your account size from your brokerage and not with over trading. Okay, because taking out multiple trades, I was sharing with you just before, is another form of over leverage because you're not trading just 1% anymore. If you've got 5 trades open at 1% each, then you've got 5% on the table. If something bad happens, then it's going to take you 2 weeks at your planned rate of 2% a week just to get back to where you were. Well, over 2 weeks, right? 2 plus 2 is 4. And then you go down this horrible spiral of silly things and doubling down, and I've seen it all. So don't force winners and don't over leverage. Okay, well, thank you for watching. Thank you for listening once again. I really look forward to meeting you in the members area and going over any concerns you have, any issues you have. I'm here for you, and I'm here for you to succeed as a trader. And we're going to go on this journey together.